Home prices are plummeting in the last few weeks, according to a couple metrics from the Cromford report. We're going to take a look at that today. Plus, did you catch the ominous news from Zillow? It wasn't the most positive thing. We'll take a look at that and get into all of this data. So let's go. Thanks for being here with me today. I do apologize. I'm a little under the weather, so just bear with me with the cracking voice this week. So monthly median sales price, look at this. That is definitely going down. If we look at March of 2025, the monthly median sales price was $460, and today it is $449,500. Now, that's not the only sales price metric that has started this downward trend, and they have a couple other pieces that we're going to look at too, pieces of this puzzle to see what's really going on in the market. So when we look at the monthly average sales price per square foot, this has also taken a dive as well. Just in March, it was $312 per square foot average. Today, $306 per square foot average. So the Cromford report is saying that the median sales price and average price per square foot for closed listings have both plummeted in the last 2 weeks. The former is down 1.7% and the latter down 2% in just 14 days. They say at this point in the year, such a move is ominous, and we fear an overall CMI under 80 means that prices will have to fall further from current levels to restore balance to the market. In fact, the situation feels similar to the second quarter of 2022. So they also reference that in 2022, it was really the iBuyers who took the hit because they had the majority of the listings out there. And that's not the case anymore. So if you've been with me week to week, we've been tracking the inventory in the Phoenix area, and it has been increasing week over week. So we're now at this situation where we're starting to see that impact of the number of inventory and the lack of buyer demand kind of finally coming to fruition, where we're seeing that impact on sales prices potentially. We got to see a little bit more data to make sure that that's what's actually happening. But both of these indicators going down in such a short period of time is kind of the first step there. And then we're also seeing price cuts as well as seller concessions increasing. And we're going to talk about that in a minute. Now, as we take a look at the CMI by major city, I want to call out a couple things here. If you're not familiar, first of all, any number over 110 is considered a seller's market. And you can see there's very few of those here on this table. There's about 7. And then any number between 110 and 90 is considered a balanced market. Any number under 90 is considered a buyer's market. So we really have a good chunk of buyer's markets, few balanced markets, and a good number of sellers markets, although those sellers markets are pretty weak. Now, what's interesting is the month-to-month trend, month-over-month trend for the average change in the CMI on all of these cities is actually decreasing a little bit. So in the last month, it was a negative 2.7% change. When we looked at this last week, the month-over-month change was negative 2.9%. So it wasn't really too drastic of a shift, not really much of anything. However, it is showing that the CMI is kind of going in that direction back towards, in favor of sellers rather than buyers. Cromford report is saying this continues the slow decelerating trend that started a week ago, but represents a very small change. This is likely to demand holding a little bit firmer, probably because we did see that dip in rates, although that's been extremely volatile. But we're still seeing a lot of supply increasing as well. And so that's what's really pushing us into more of a balanced market in some areas and a buyer's market in other areas. So they even call out here that supply continues to barrel higher, something it should not normally be doing in April. If it increases in April, then it's likely to increase further during the second half of the year, unless conditions change drastically. If conditions stay on their current track, sellers will have even more of a challenge in the second half of 2025, as each seller will be competing with too many other sellers who are equally anxious to attract a firm offer. Price cuts and concessions are going to hit new highs under these circumstances. So that's something to consider if you've been thinking about selling your home. Yes, the conditions right now are not the best seller's market we've ever seen, but if supply continues to increase, which it has been on track to do, the longer you wait and further into the year, you might be dealing with more competition. Of course, nothing is certain, but on the trend that we're seeing right now, it's very possible. And typically we do start to see a little bit more supply over the summer months because our demand decreases slightly. So we're already getting into that time of year where things start to slow down a little bit. When you add these conditions on top of that, it could be a very slow summer for sellers. And a slow summer for sellers without a promise of a busier fall season if we continue to increase these listings. So on that note, let's take a look at what's going on with price cuts. They are somewhat elevated. In the last week, we saw a little bit of a drop off, but for the most part, this has been increasing to about 3,700 listings had a price cut that week. And last week, 3,300 listings had a price cut. If we look at the median price cut amount, it's about $10,000. Now, seller concessions are the other thing that they're saying we're going to start to see increasing. And oftentimes we start to see those price cuts. We see an increase in seller concessions before we actually see sales prices moving down. But we are seeing some indications of those sales prices potentially already moving down. Therefore, that means that this is likely already happening. So 48% of sales in the last 30 days had some form of seller concessions, with the average being about $10,000. So this is good information to know whether you're a buyer or a seller. On the buying side, this is definitely something that is reasonable to ask for and negotiate into your contract. And on the seller side, just know that you will likely get some form of seller concessions, or you have a 48% chance at this point that will actually happen to you when you receive an offer. Now, I know a lot of this is not rainbows and butterflies for sellers, but if you've been considering selling your home, you just want to know what you could potentially list for, I have a link below for an instant home value. You can check that out. You could also get an idea of the inventory in your zip code. So check below for a link in order to request that info as well. Now, the other not so great news from the Cromford report, they're looking at average list price per square foot, and we're comparing the under contract list price per square foot, the closed list price per square foot, and the actual sales price per square foot. Now, I've shared this chart before, and I know it can be a little bit confusing. So I will walk you through what is actually going on here. So the green line is the average dollar per square foot for listings under contract, meaning that we don't necessarily know what they're under contract for, but it is taking the last list price that was listed and knowing that house is now under contract, considering that to be that under contract price. The Cromford report is saying that this measure hit $350 per square foot at the end of December. Then it fell to $335, and now about 5 weeks ago it started to go down again and currently stands at $322 per square foot. And this is a leading indicator for closing prices. Obviously, when that under contract list price is going down, that means that we are likely going to see those closing prices go down as well. Now you have the brown line, which is the closed list price dollar per square foot, meaning that it is what the list price was when that transaction closed, and then the actual sale price of dollar per square foot, which is the actual closing price. So when we compare these, we can see what it was listed at when it closed and what the actual closing price was. Therefore, you can kind of get an idea of how far below the list price that home closed for. Now, that does not take into consideration how many price adjustments they may have made before they got to that list price before closing, right? So this gap could be a little bit higher. The Cromford report is saying that gap right now stands at 97.7% of list. And you can see there's very little day-to-day fluctuation in this percentage. They also call out that any concessions to the buyer are not being accounted for in these numbers. So there could be an additional discount that buyers are getting from sellers that we're not seeing in this chart. Now, when you look at the actual sales price dollar per square foot, we're seeing that the monthly average sales price has descended from 316, that was on March 28th, to 302 on April 18th. So that's actually a 4.3% decline in only a 3-week time period. So in this average list price per square foot, we are also seeing that decrease in sales prices as well. The Cromford report is saying that this amount is unusual. It should not be too startling given what happened to the green line, again, indicating that under contract list price being a leading indicator, right? However, it's still at a similar level to 3 weeks ago. It's no longer as ominous as it was when it dipped below the brown line on March 25th, but it is something we need to be watching closely to see which way it moves next. The green line is that leading indicator, and then anything that has closed is representing contracts that were signed or negotiated weeks before, perhaps a month before. So this is definitely something to keep an eye on, but again, we're seeing this kind of softening in pricing in this chart as well. So I know I've mentioned how luxury is doing better than the rest of the market. However, last week I think I said that with all of this volatility in the market, that tends to be where the luxury buyers put their money, the stock market, and keeping track of what's going on in the economy. And all of this volatility could perhaps affect the demand from luxury buyers. We are starting to see that taper off in our listings under contract. The Cromford report filtered listings under contract for all homes over $1 million. And this is what we're seeing. The 2025 counts for homes over $1 million were noticeably higher than in 2024 until we reach week 11. So that is right about here, where you see the red line start to move below the purple line. From week 11 through 16, the 2025 counts got weaker while corresponding 2024 counts got stronger, peaking in mid-April. We're now 15% below the corresponding 2024 count, having been 9% above in February. Now, as you can see with the purple line, we typically do see a downward trend in this price point as we get into like week 20 to week 19, which is typical because we have a lot of spring buying going on in this market. And then for the summer, it really tapers off. However, it looks like we've seen this downturn much sooner this year than we normally do. And that could certainly be affected by what's been happening in the stock market. Now, of course, let's take a look at active listings altogether because we've been tracking this every single week. Today, we're sitting at about 26,362. This has continued to increase very steadily all year long, which is well above what we saw last year, as well as most of recent history. We have to go back quite a ways until we're seeing inventory levels as high as we're at today. So then let's look at the number of new listings hitting the market, because remember, this is a combination of we're getting more listings on the market, but we also don't have the buyer demand that's typically there to absorb these. So they're starting to pile up. But if we look at only new listings that are being added to the market, we have 6,893 for the month of April so far, trending to beat last year once again. It's April 22nd when I'm recording this. We still have some days, like over a week left in this month, that will likely beat out last year's numbers. And we've been consistently doing that every single month this year so far. Now let's talk about what's going on with rates, because we talk about this every week. And by the way, if any of this is of value to you, consider subscribing to be part of our community or share this with someone who may find it interesting. So where we're at with rates, we are below 7%. You'll see that we had on the 16th, we kind of hit this dip here, and then things started to trend upwards again. According to one of the lender partners that I have, they shared that rates fell back under 7% after hitting their highest levels in roughly 2 months. Trump administration announced his plans for a measured economic approach. On top of that, he was also very critical of Jerome Powell last week, and actually hinted at a possible removal. So that shook up the markets a little bit. It cooled investor nerves after the prior week's tariff-driven chaos. And as a result, money started to flow back into the bond market, with investors opting for safer returns over staying liquid in margin accounts. They also say volatility is still running high, so buckle up. So if you're a buyer out there, make sure to keep an eye on rates. And as I've shared before, if you're trying to avoid today's rates, consider the option of finding an assumable mortgage. They are a little bit of a needle in a haystack, but they are totally possible to find. I have a list of homes with assumable mortgages below, and you can chat with our team to learn more about what that process looks like. Now, did you see the news from Zillow? They often give predictions throughout the year. They happen to have a bearish prediction at the moment. Zillow turns housing bear. Just look at its updated 2025 forecast. They project that home prices will fall 1.7% between March of this year and March of next year. Last month, Zillow economists still thought U.S. home prices would rise this year. So what a quick turn we saw. But that is also what we've been seeing in our local market too. There's been a lot of strength despite the volatility, despite the increase in supply. We've still seen these prices holding strong. And now we may be starting to see a little bit of a crack going on. So last week, they projected home prices will fall 1.7% in the next year. In March, Zillow downgraded its 12-month outlook for U.S. home prices to 0.8%. And in February, it had downgraded its 12-month outlook to 1.1%. And at the start of the year in January, their 12-month national home price forecast was 2.9%. So they keep downgrading every single month. And they're talking about this because of the rise in active listings, fueling softer price growth. All of this sounds very familiar. As greater supply provides more options and more bargaining power for buyers. Potential buyers are opting to remain renters for longer as affordability challenges suppress demand for home purchases. So that combination of seeing an increased supply and knowing that a lot of people are opting for renting because it is more affordable is just really hitting buyer demand kind of hard. So let's take a look at the overall CMI across the Phoenix metro area. Stands at 78.2. As the Cromford report said, the more we start to go below 80, the more we're going to have to see prices come down to kind of get back to a balanced market. Demand is at 82, so that's about 18% below normal. That has been increasing just ever so slightly. We've been out of the 70s for a few weeks, but the supply is also increasing. So it is at 104.9. It's 4.9% above normal for supply. This is a flipped scenario from what we were talking about a year ago, where we had lower supply than demand. So this is where we're really seeing this competition amongst sellers, how buyers are able to negotiate in those concessions and also get a price reduction. Now, looking at the contract ratio, we are seeing all the different zip codes here. As we see every week, we've got a few that are hot, but for the most part, we are sitting in this balanced warm zone in all of this green, with some areas being a little bit colder. The overall contract ratio across the valley is 36.6. And so if we look back here, anything between 30 to 60 is considered balanced and warm. If you're curious what your contract ratio is in your zip code, whether you're thinking about buying or selling in that area, check the description below and you can request that information. Well, thanks so much for bearing with me today, you guys. If you have any questions, drop them in the comments below, and I will see you guys all next week with my next market update.